All right, let's get your money news now. And as Western countries ban oil and gas imports from Russia, local analysts are flagging the cost implications for us here in South Africa. So just how reliant is the world on Russian oil? Devan Murugan joins us now to tell us more. Hi, Dev. So just how big of a global oil supplier is Russia actually?
Yes, good afternoon, Sally. Well, number 3 on the chart, but here's the context of what happened so far. So, really speaking, when you look at what happened with the major countries and its reaction on Russia, here's the picture at the moment as of last night. So the US has immediately banned all oil, gas and coal coming out of Russia. The United Kingdom says it will phase out Russian oil by the end of the year. And as far as the European Union is concerned, well, it's also reducing its Russian gas imports by about 2/3. So what does it look like in terms of Russia on the male oil supplier stage? Let's take a quick look at this chart. And interestingly enough, as I said, it stands at number 3. The United States produces 16.5 million barrels of oil per day. Saudi Arabia comes in at 11 million. And just below that, that's where Russia sits, 10.7 million barrels a day, followed by Canada and Iraq. Now, the real question is how much of that really goes out into the global market. Let's take a quick look to find out what happens with the oil that Russia actually exports. It exports 5 million barrels a day, and we know that some of that, at least half of it, goes into the European Union states. That's a sizable amount of Russian oil going into Europe. But then, as we heard yesterday when we had that announcement of the United States government banning oil imports, it's not that reliant on Russian oil, Sally. Only 3% of what Russia exports actually goes into the United States. That's the picture at the moment, and that's what Russia plays in this game of oil. A big player, but number 3 on the charts, and as I said, just 3% of that Russian exports actually goes into the United States.
So for us here in South Africa, it's more than about the international price of oil that could have a direct knock-on, not so much whether we get oil from Russia.
Yeah, that's precisely the case when it comes to that. You know, as we speak to analysts and experts on what the impact would be of this ban worldwide, they're quick to point out that what's important for South Africa is not so much where we get the oil from. African countries like Angola and Nigeria, even Singapore and Saudi Arabia is where we source crude from. That's not the significant component in this. What's important is that irrespective of where we get our oil from, the stage at the moment with the banning and the sanctions against Russia increases the price of oil, and because it's an internationally priced commodity, consequently, irrespective of where we get our oil from, Sally, the price of oil goes up. So indeed, it does have, as we've heard through the entire week, inflationary concerns for us. We've just seen that insert telling us that, again, it's not just the price of petrol or fuel that will go up, but everything in the value chain, in the production value chain that uses oil, you would see price rises. So again, not so much where we get it from, but the international price of oil.
And also, particularly as we've heard from Eskom today, that we are using an astonishing amount of diesel. And in fact, I'm going to call up the numbers because 4 million litres of diesel a day is what we're using to support our electricity system. And of course, diesel is derived from Brent crude oil. So that is going to have a huge impact on our economy if we have to keep running diesel to keep our lights on. So that's where we're going to see it really hurting us, am I right?
Indeed, you will see that, and I'll tell you another institution that will be watching exactly what you just said is the Reserve Bank, because when they see the price of electricity production going up, interest rates are the next target.
Devan, tell me a little bit more about the iconic, mainly US brands that are shutting operations in Russia, and I think it's McDonald's, Starbucks. That of course will have an impact as well, sort of globally in terms of the markets. Am I right?
Indeed it would, but it will really put pressure on the Russian economy and the Russian people. Let's take a quick look at those iconic brands that you talk about today. In fact, this morning we heard that Coca-Cola, Starbucks, McDonald's, including Pepsi, will be reducing their activity. In fact, Coca-Cola says it will shut off sales completely. So too will McDonald's. They are halting their institutions, actually their restaurants and their takeaways. Starbucks follows with that. No more coffee in Russia. Pepsi says it will stop the sales of its soft drinks, but there would be some essential items that come out of the PepsiCo group that will be shut off as well. So you're starting to see that pressure coming through on the Russian economy. And as Wayne McCurry told us yesterday from FNB, that sort of sanction is going to be very, very difficult, Sally, for Russia to come out of.
All right, so with all that said, how are the markets looking?
Yeah, we had a fairly good day on the local market, Sally, about 0.5% up on the JSE All-Share. Retailers, banks all comfortably in the green in the midst of all of this. Not so good if you're holding mining shares. I want to get Chantal Marks from FNB Wealth and Investments to tell us more. Chantal, thanks very much indeed for talking to us. So, as I said, in the midst of the turmoil, our local market really had a good day. Just looking at the rand a few moments ago, close to 20 cents higher than it was yesterday against the dollar. Why are we seeing such a positive picture in the midst of all of this?
So from a JSE perspective, we are following global markets in terms of dip buying. And what we mean by dip buying is everything that was down over the last week or two is basically up. Investors are thinking that some of these companies offer value now, perhaps significant value in some cases. And I'm just going to give you a few examples. Naspers down substantially since the start of this process. Richemont, all of these stocks were up today quite strongly, and they're an important part of the index. When it comes to the rand, it's partly because we are seeing foreign investors very interested in the South African market, both on the JSE as well as government bonds. They just look more attractive relative to the rest of the world and safer within an emerging markets context. And then also supporting the rand is very strong commodity prices. Only oil really is a detractor for South Africa at this moment because we don't produce it here.
And I know overall the oil price is increasing, but it was interesting to see yesterday we were heading towards $140 a barrel. Took a look at the numbers just before I got on here, and we're down to 120 today. Is that significant or not, or is it still a bumpy ride ahead?
So I think we're still going to have a pretty bumpy ride ahead. But what this does tell us is that when we are seeing hard news coming through, there's almost a relief in the oil market. So the market speculates, it pushes up the oil price. In this case, the speculation was that the US and the UK, and perhaps even some European countries, were going to ban Russian imports. And then when the news actually broke that the US was going to do that, it was almost like there was a sigh of relief, and that it's now happened and they can stop speculating, and the oil price pulled back to, let's call it reasonable, but not so reasonable levels.
Before I let you go, a couple of results out today. I've just got time for one. Nedbank showing us some good numbers today, and I think interestingly enough, when we have good bank results, it tells us something about the consumer, doesn't it? I mean, in the case of Nedbank, it looks like people are not doing too bad on their debt repayments.
Yes, absolutely. And this is something that we've seen among the banks generally. So when COVID-19 hit, the expectation was that a lot of people and a lot of businesses were going to struggle to meet their loan obligations, to make their interest payments. And banks were very cautious. So they actually built in a buffer in their financials to counter that and to allow for that. And it seems as if consumers and businesses alike have performed a lot better than what the banks were expecting. And as a result, you're seeing a really nice uplift in profitability. What's also helping them is transaction volumes are increasing. And of course, unfortunately, banks are one of those industries that actually benefits from higher interest rates. So also being helped along by that.
Chantal Marks from FNB, thanks very much indeed for your time. All right.